Good day, everyone. Good day, Sir Lee and Sena. My name is Taylin Carrion, and with my partner, Dafren S. Rabondo, we are presented about the topic Forms of Business Ownership. The legal form a firm chooses to operate under is an important decision with implication for how a firm structures its resources and assets. Several legal forms of business are available to entrepreneurial business owner. Each involves a different approach to dealing with profits and losses. When you're looking to launch a new venture or take your existing small business to a higher level, it's important to choose an ownership structure that can support your goals. The main consideration when choosing a structure for your business are simplicity, liability, control, financing, and taxes. In this topic, we discuss the sole proprietorship as well as several other forms of business ownership, including partnership and corporations, and the distinction between a corporation and a partnership as to legal capacity.
So for sole proprietorship is usually owned and managed by one person, and it can be easier to start and end the business than the other forms of businesses. And to start out, you need to lease or buy the equipments in the rental space and obtain any permits or license you may need for your particular type of business. Since you are the owner, you are the own boss, which is a great benefit, and also you can retain the company profits. And because this whole proprietorship, there is no special taxes, which means that all of the profits are taxed as personal income, and you can pay normal tax on that money as well as self-employment tax. Next, please.
Next is partnership. A partnership is a formal arrangement by two or more parties to manage and operate a business and share its profit. There are several types of partnership arrangement. In particular, in a partnership business, all partners share liabilities and profits equally, while in other partners may have limited liability. There also is so-called silent partner, in which one party is not involved in day-to-day operation of the business. The parties may be governments, non-profits, enterprises, businesses, or private individuals. The partnership has several advantages over sole proprietorship. First is it brings together a diverse group of talented individuals who share responsibility for running the business. Second, it makes financing easier. The business can draw on the financial resources of a number of individuals. The partners not only contribute funds to the business but also use personal resources to secure bank loans. And lastly, continuity needed be an issue because partners can agree legally to allow the partnership to survive if one or more partners die. Within the narrow sense for a profit venture undertaken by two or more individuals, there are three main categories of partnership. First is general partnership, limited partnership, and limited liability partnership. First is general partnership. In a general partnership, all parties share legal and financial liability equally. The individuals are personally responsible for the debts the partnership takes on. Profit are also shared equally. Next is limited partnership. It is a hybrid of general partnership and limited liability partnership. At least one partner must be a general partner with full personal liability for the partnership step. At least one other is a silent partner whose liability is limited to the amount invested. This silent partner generally does not participate in the management or day-to-day operation of the partnership. And lastly, limited liability partnership. It is a new and relative uncommon variety. This is a limited partnership that provides a greater shield from liability for its general partner. Limited liability partnership are a common structure for professionals such as accountants, lawyers, and architects. This arrangement limited partners' personal liability so that, for example, if one partner is sued for malpractice, the asset of other partners are not at risk. Some law and accounting firms make a further distinction between equity partners and salaried partners. The latter is more senior than associates, but does not have an ownership stake. They are generally paid bonuses based on the firm's profit. Next, please.
So next is corporation. So this is a type of business entity that is owned by its shareholder or shareholder who will elect the board of directors to oversee the organizational activities, and it can be government owned or privately owned, including profit and non-profit corporation. A privately owned can be privately held by a small group of individuals or publicly held to publicly traded shares listed on a stock exchange. Next slide, please. So let's proceed to the distinction between a corporation and a partnership as to legal capacity. So first is the corporation has a stronger legal personality, enabling it to continue despite the death, insolvency, or withdrawal of any of its stockholders or members. So in partnership, the withdrawal, death, or insolvency of any partnership would automatically bring about the dissolution of a partnership. So next is the limited liabilities, the main feature in a corporate setting. So whereas general partners are liable personally for partnership debts, not only of what they have invested in the partnership, but even as to their other properties. That's all. Thank you.